This is Daniel Tepper at the NASDAQ market site, BioBusiness TV. We're here with Lionel Leventhal from Pole Capital. Lionel, good afternoon.
Hi, Daniel. Nice to meet you.
This is a tough market for everybody, but particularly for biotech companies. Even those who are hitting all of the milestones are suffering. Do you think that's going to continue? What's your outlook on the market for biotech companies?
It's a good question. I think we've seen both in the U.S. and London Stock Exchange for European companies, small, mid-sized pharma companies. As you said, some of them have hit every single operating benchmark, approved products, partnerships, and have seen their prices fall 30-40%. Lots of people withdrawn IPOs, withdrawn secondaries. I think historically over the last 20 or 30 years, there have really only been small periods of times where the equity market's been open, and people sometimes lose sight of that. But we haven't seen any indicator that that's going to change anytime soon.
Is it better to be a private company than a public company? Should you be a bigger company? I mean, is there a recipe to escape the volatility of the market?
Well, I think companies should think long and hard before going public. Going public used to be an exit for investors. Today, going public tends to be more of a route to access additional growth capital where people would expect to exit several years later. So I think the decision about whether to go public or not depends upon how much money you can raise and whether that's the best source of raising the amount of capital that you need for a company, for example, to reach cash flow break even.
We're on the first day of the annual meeting of the New York Biotechnology Association here in New York City. Several panels have focused on alternative ways of raising money beyond traditional equity and debt. Can you tell us a little bit what you've heard today?
Yeah, I heard some very interesting things that I wasn't really aware of. I've heard one of my co-panelists spoke about venture philanthropy, where people look to make either no return or minimal levels of return. I heard someone from the NIH talk about annual grants totaling $650 million with no expectation that that money is repaid. These tend to be very small grants on the order of magnitude of $100,000, $200,000 for products that are preclinical, projects that are preclinical. But for example, those are two interesting things that were pretty novel that I was less aware of.
How does Pole Capital participate in financing biotech companies? What kind of companies are you looking for, and what is the structure of the deals?
So Pole Capital Healthcare was started in 1999. We actually created a third form of financing. So most people think about financing their companies either with equity or with debt. With equity, you're giving away really a permanent share of your future profits and value. We basically purchase participations in revenues or royalties. A company might not have a royalty. We might create a synthetic royalty, purchase a revenue interest, and that is a way of basically a company raising non-dilutive financing that's focused on the prospects of a specific product or bundle of products, and we price that at something that's really below what most equity investors are looking to earn. So think about it as high mezzanine to low equity cost of capital that's non-dilutive, that doesn't have any of the restrictive covenants of traditional debt.
Can you give us a successful example of financing that you've completed and maybe exited recently?
Sure. So I'll go back to one of our earlier investments. First, a company in the UK, a drug delivery company, Sky Pharma, had a slow-release injectable morphine product, depomorphine. They wanted to retain that product and keep it as long as possible, so not partner it until it was just about to be approved so that they could get much better terms in licensing. So we helped provide $30 million to help finance the phase 3 product. We financed it basically as it was exiting phase 2, going into phase 3. In return, we took a participation in 3 smaller marketed products as well as in depomorphine. As a result, Sky Pharma basically funded the development of the product itself through approval and then was able to license it for very attractive terms. More recently, company that we invested in back in March, Plethora Solutions, which is a London Stock Exchange traded company focusing on male health. We took a participation in I'd say a fairly low-tech device that they were selling, a marketed product that will never be a huge product, but provided the basis for a modest return. We took a participation in that, as well as some phase 2 and phase 3 products, and it enabled, in this, as you talked about correctly, a very difficult financing market, enabled this company to fund 2 very exciting novel phase 2 and phase 3 products in the male health area that really are unmet needs.
Thank you very much.
Thank you.